In the current year, Todd owned a waterfront vacation home that he used from January 1st to February 28th. The rest of the year, he rented the vacation home for $1,000 per month at fair rental price. Mortgage interest for the year was $15,000 and repairs were $1,500. Depreciation was $150 for the rental period. What is the amount that's carried over to the next tax year as unused rental expenses? Since we're dealing with rental activities with partial personal and partial rental days, the first step is to determine if the full amount of the expenses can be taken or only a portion based on rules and limitations. If the property passes both the minimum rental use test, more than 14 rental days, and the minimum personal use test, then all deductions may be taken and a loss may occur subject to the passive loss limits. However, the personal use test fails as there are 59 personal days. The 59 personal days come from January 1st to February 28th of personal days. This is much more than 10% of the rental days. If the property passes the minimum rental use test but fails the minimum personal use test, the property is considered a vacation home and rental deductions may not exceed gross income derived from the rental activities. Here that amount is $10,000. Next, it's important to note that expenses must be allocated between the personal use and the rental use based on a number of days of use of each. Since Todd used the home personally from January 1st to February 28th, 59 days are considered personal of the total 365. That means 306 days out of 365 are rental, the remaining days. Finally, since the deductions are limited to gross income, the order of deductions is, first, the allocable portion of expenses deductible regardless of rental income, and examples include mortgage interest and property taxes, as they're normally allowed to be deducted anyways. Second are deductions that do not affect basis. Examples are ordinary repairs and maintenance. And third are deductions that do affect basis, like depreciation. Any portion that is not deductible is carried forward to the next year. So let's calculate what is deductible in this year in order to determine what's going to be carried over to the next year. The revenue is $10,000 from rental. So expenses are generally limited to this amount, except for the first category, the allocable portion of expenses deductible regardless of rental income, like mortgage interest and property taxes, because again, they would have been deducted anyways on Schedule A. Let's go through the three expenses to determine the ordering. So the first category, the allocable portion of expenses deductible regardless of rental income, the interest allocated to the rental is $12,575, which is the $15,000 of mortgage interest times 306 rental days out of the total 365 days. That gives us $12,575. And that goes to the first category. Why? Because that would have been deducted regardless if this was a rental. The remaining interest would also be deductible on Schedule A as a mortgage interest deduction, beyond the $10,000. Since the $12,575 number is greater than the $10,000 rental income, categories 2 and 3 cannot be deducted. The portion attributable to the rental activity will be carried forward to the next year. So this will be the repairs of $1,257, which is $1,500 of the repairs, times the rental portion, which again is 306 days over 365 total days, multiplied by the 1,500 repairs, and that gives us $1,257, plus the $150 of depreciation, which is all allocable to the rental activity because you can't take depreciation on the personal days anyways. So that's all going to be for the rental period. So this $1,257 plus $150, this $1,407, because category 1 takes the entire $10,000 of income, none of this can be deducted in the current year, and the remaining $1,407 that's attributable to rental deductions in categories 2 and 3, that amount gets carried forward to the next year. So that's going to be our answer, $1,407. Let's consider the answer choices just to go through the different possibilities and why they're wrong. Choice A, $3,982. In $3,982, the mortgage interest is fully deductible in computing a rental loss for the year, but it's limited to $10,000 of rental receipts. So this answer is incorrect. B, $150. This is the amount of the depreciation. a portion of the repairs attributable to the rental days, 306 out of 365 days, may be carried forward to next year. So that amount also gets added in, not just the $150 of the rental, the category 3, also category 2 gets allocated in that carryover as well. So item B is incorrect. C, 1650. This answer choice is incorrect. This provides that only a portion of the repairs attributable to the rental days, 306 out of 365, can be carried over. This is saying the full 1,500 and plus the 150, which isn't correct. We have to take into account the rental days of 306 over 365. So this answer is incorrect. Finally, D is what we calculated, 1407, which is the correct answer.